Welcome and what is up there everybody, this is Casper Trader back here with another video today. And in today's video, we'll be talking about the top 5 travel stocks to invest in 2020, especially after this whole pandemic. And a lot of these stocks are actually still on really great deals, and you can buy them at a significantly lower price than what they used to be just a few months ago. But if you take a look at the overall stock market, a lot of stocks have actually recovered and are now making all-time highs, while a lot of these travel stocks are still at insanely good deals. So that's why we're making this video today, to show you guys some stocks that are at really good prices, really good deals. We can buy them for like half the price that they used to be at just a few months ago. So without further ado, before we get into the video, I'd really appreciate you guys could smash that like button below and subscribe to the YouTube channel if you guys have not yet. I'd really appreciate it a ton. Alright guys, so getting into the first stock, and you guessed it, that is Hilton Worldwide. Hilton builds a lot of hotels actually around the world. They're an American company, but they do have a lot of international hotels as well. And this stock's price to earnings ratio is around 28, market cap is around $22 billion, and they do have a small dividend. But with a lot of these stocks, just a little disclaimer, make sure to check out each stock separately if they do pay out their dividends right now, because I noticed that a lot of stocks in the travel industry especially have cut their dividends and are not paying them anymore, because unfortunately they're not able to make anywhere close to the amount of money they used to be making before this whole pandemic happened. So make sure to check if the companies actually do pay a dividend if you're buying them for a majority of the cause of the dividends. So we could take a look at Hilton Hotels. They're around $80 per share right now. Today, they're up alone over $7 per share, around 10%. In the last week, they're up 7.4%. In the last month, they're up 1.1%. Last 3 months, up 18%. In the last year, down 18%. And the last 5 years, they're still down 4.5%. But as you can see, before this whole crazy situation happened around the world, this stock used to be trading at around $100 to $110 per share. And once this whole thing happened, the drop was insanely quick and insanely big. At a certain point, the stock dropped down to around 50% of what it was back above here. And it went from $110 per share down to $55 per share. But since then, it has slowly been recovering. There have been ups and downs, but right now it's sitting at the price of around $81 per share, which it still has a lot of margin to recover if it does end up going back up to where it used to be before the whole global situation happened, at around $110 per share. But this company just in general has a lot of hotels everywhere over America and in different countries as well. They do have resorts as well, so it's not just hotels. And if you take a look on their website, you can see that they have hotels in New York, San Diego, so California, Myrtle Beach, Virginia, Chicago, all these different places around America. And there's a pretty big chance that if you're watching this right now and you live in America, you probably stayed at a Hilton hotel before, at least once in your life. And this stock, I don't see it personally going anywhere. And again, just a little small disclaimer, I'm not a financial advisor, so make sure to do your own research and due diligence when investing in any of these companies. I'm just simply sharing my opinions and my thought process on whether I would personally invest in these stocks or not. But yeah, Hilton Hotels, I feel like it's a great company and it's going nowhere in the meantime. It's not an industry that it's dying at all or anything. So I think that Hilton would personally be a great investment that I would choose to make. So now moving on to stock number 2, we have Royal Caribbean. Ticker symbol RCL, and this is a is a cruise line company. And today alone, it's up over 21%, which is insanely high gain for just one day. And in the last week, they're up 13%. In the last month, they're down 10%. Let's just skip over to the last 5 years, in which they're down 30%. But as you can see, they also had a really big drop in the last few months. They used to be trading around the area of 130, 135. But even a few months before that, like in 2019, they were still trading at over $100 per share. But ever since this whole global situation happened, the stock literally fell down to $23 per share, from $135 to $23 per share. And now you can actually buy the stock at around $60 per share, so it has recovered a really big amount. It is like doubled in price, over doubled in price, ever since the whole drop, but it's slowly recovering. again, there are ups and downs. Like at a certain point, it's already at like $70 per share. But this stock is slowly but surely recovering. Unfortunately, for what I know, I'm pretty sure that Royal Caribbean and all these other cruise line companies aren't able to sell cruises yet. But maybe in August there might be some change in regulations, or maybe in the months after that. But right now, you just have to take into consideration and notice that a lot of these cruise companies aren't able to sell their services, where basically that's the only way they make money. So these companies aren't really making any money. They're not generating any revenue, and they have to still pay for their current expenses and paying off their debt and everything like that. So there is a small chance that these companies may go bankrupt, but we're taking a look at the positive side if they do end up recovering, which I personally think that most of these stocks will. And if they do recover, who knows, maybe 1 to 3 years from now, they might be back at the price that they used to be just before the crash happened, at maybe around $135 per share. So that's stock number 2. We have RCL. Now moving on to stock number 3, we have CCL. And since this is a cruise company, we've already talked about the cruise sector a little bit about the previous stock. We're going to just go over this one briefly. Carnival Cruise is also a really big cruise company, and I think this one's even more well known than Royal Caribbean, at least in the whole internet space and YouTube. But Carnival Cruise is sitting around $17 per share right now. I personally did invest like $190 into this, where I'm up around $11 on it, so that's not bad, 6%. But this company has by far suffered the most and not been able to recover that much out of all the stocks that I'm going to mention in today's video. Carnival Cruise was growing, it fell a little bit, but right before the whole situation happened, this stock was trading between like $45 and $50 per share. And then once this whole situation happened, it fell down to like $8 per share. Just imagine buying 100 shares at $50 per share, and then you wake up one day and just, let's say, not looking at your portfolio for a month, and you wake up and you see that this stock is literally down to $8 per share. That would be crazy and pretty sad, honestly. But this stock does have a big margin of profit, so that's a good benefit on it. So basically, if you invest in right now into the stock, it could increase theoretically if they do end up continuing their services, they don't go bankrupt, everything goes well the next 1 to 3 years, and they continue selling their services, they're back on track with the cruises they do. If the stock price does recover to where it was just a few months ago, this stock will still be like 2 to 3 times the price that it is at right now. So that's why I personally invested into the stock. It's a more of a high risk, high reward situation, but I'm definitely looking to have some of that in my portfolio, especially like dumping in $200. If this does end up recovering, let's say 2 3 years from now, to $40 per share, so I'll have like $500 worth of the stock in my portfolio, which would be pretty nice. And if they do end up continuing paying their dividend, which right now I think they did cut their dividend, which means they're not paying it out right now. But if they do end up paying their dividend after they get back on track with selling their cruises and everything, you'll also be getting a really decent dividend from this stock. So that's something you should also take into consideration. So that's Carnival Cruise. That is stock number 3. Now moving on to stock number 4, and this one's going to be in a different sector, and that is Delta Airlines. Delta Airlines is in the airline industry, if you haven't guessed that yet. But it's currently sitting at around $28 per share, and today, again, like the majority of travel stocks today, has risen almost 10%, so $2.50 per share. And I'm currently invested in the stock as well, not as much as Carnival Cruise, but still not a bad amount. And I'm up around 6.8% of my position. And if you take a look in the last week, Delta Airlines is up around 5.5%. And if we just skip over to the 5-year chart, you can see that this stock was generally consistently growing with ups and downs, but it was generally rising from around $45 per share up to around $55 per share over the last couple years. I would say 3 to 4 years. And then this big drop happens because you know what came across, the whole global situation. So that really limited travel, especially for taking planes to different countries. It's a lot less safe and a lot less available to do because just basically because of the safety guidelines, which aren't the same for every country. But generally speaking, a lot of these airline companies did fall significantly in price, especially in their stocks. And you can see that this stock was usually trading around $55 per share, $50 to $55 per share. And then just within a few weeks, it dropped down all the way to like $21 per share. And the lowest point was $19 per share. And ever since then, it has had a little spike up. And now it's sitting at around $28 per share. But if this company does end up recovering, everyone starts taking planes again, going all around the country, all around the globe, then this stock will be able to probably, in my opinion, recover at least close to where it was at before, at least maybe $30, $40 per share. And with that, this stock also does pay a nice dividend. Again, right now I'm not sure if it does pay a dividend, but if it does continue paying its dividend after they recover from this whole situation, that'll be also a nice perk of investing in this stock. Just a little dividend that you're able to get. So that is Delta Airlines. Now moving on to stock number 5, we have Jets. And Jets, not Jeets, Jets is an ETF that basically tracks a lot of airline companies. And this is more for the people who aren't really looking to have a huge amount of risk, but you're also risking being in the airline sector because that's a pretty risky sector to be in right now. But overall, if you take a look, in the last 5 years, this stock has usually been trading around the 28 to 30 something dollars per share area, 28 to $31 per share. And then this whole situation comes by, and literally within like 4 weeks, this whole stock drops down to $12 per share. So that is a significant drop, like from $31 per share to $12 in just a month is a pretty decent drop. And since then, it has recovered a little bit. It's had a big spike up, and then since then, it's slowly been bouncing around the area of $16 to $17 per share. But the good thing with investing in a stock like Jets is that you're pretty well diversified in the airline industry, meaning if one company happens to go bankrupt, then if the other companies end up going up, you're not really going to see much of a loss. But also, that goes in the other directions. For example, if two stocks just really go off and start going up in share price by a really large amount, and the other stocks are lacking and maybe falling a little bit, you won't really be able to see any gains. So it's a little bit more diversified, but overall, if you're counting on the airline sector recovering, I think that this is a good stock to invest in. It's pretty cheap, and if you invest in it, there's not much risk in just getting this stock price going to zero, like there may be a risk with just investing in individual airline companies. So that's why I recommend this stock if you're taking a look at the airline industry. So that is basically it for today's video. I hope you guys enjoyed it. These are my top 5 travel stocks. If you guys are interested in other videos about finance, make sure to hit that subscribe button and that notification bell. Thank you guys all so much for watching, and I hope you guys have a great rest of your day.